Thursday, July 27th, 2017, Monaco 64, home of alternative economics and contrarian views. I like to talk about the dollar index. The dollar index, in my opinion, has put on a long-term top earlier this year, beginning of the year. And I'm going to show you why I think that is true. Before that, I'll just do a quick brief update on what happened yesterday in the markets. So the FOMC came out. It wasn't a normal meeting where they have the press conference. They just made the announcement. They didn't raise interest rates, which was totally expected, excuse me. But as Zero Hedge says, dovish Fed admits inflation weaker, says balance sheet unwind to start relatively soon. So all the comments the Fed made was taken in a dovish manner by the market. And what happened? Well, we saw the dollar dump. We saw gold higher above 1260 after being around 1247, 48 earlier in the day. And we also saw silver rally from around 1625, and right now we're at 1670. So the reaction of the market was to a dovish reaction. Stocks also rallied, yields dropped. So I want to talk about the dollar now, and specifically the dollar index. And I'm going to look first at a long-term chart, and I'll bring it up here. And it's going back to the early 70s, and drawn a trend line here, you know, with the major tops in the dollar index. I think we've had another top here, January 2017. And I've looked at the cycles a little bit, done a bit of cycle analysis for the dollar index. So I've taken the low in October 1978. That was a cycle low there, and then a high in February 1985. So that cycle took 6 years and 4 months, or 2,315 days. And then from the February high in 1985, we made a low in September 92. You know, that was a bear market for the dollar index. That took that took 7 years, 7 months, so 2,769 days approximately. And then from the 1992 bottom in September, we saw a bull market in the dollar. That was the period where gold was really kept down, and you know, there was the strong dollar policy of Robert Rubin at the U.S. Treasury. And I think that's when a lot of the gold leasing started. Robert Rubin worked for Goldman Sachs. He was the CEO there, but he started out at J. Aron, which was the bullion dealing part of Goldman Sachs. So that strong dollar policy lasted to July 2000. Well, didn't last till then, but the rally in the dollar, the bull market in dollar, lasted to July 2001, which was the bottom, roughly the bottom in gold, you know, to 1999, 2001. I think it was $1 difference. The low in 1999 was 253, and the low in 2001, 255. So that dollar cycle took 8 years and 10 months. So that was a very long cycle, 3,226 days. And then from that's when the gold bull market started at 250. The dollar dropped in a cycle of 6 years and 8 months, so 2,435 days. And the low was in March 2008. That was the high in gold at 1,031. So you'd think now, since March 2008, as you can see, the dollar has gone up. There has been ups and downs there in 09, 2010, 11, but it made a bottom in 2008 at approximately 70.69. And now from March 2008 to January 2017, that was 8 years and 10 months. So it was just as long as the 1992-2001 bull market. But in spite of that, you'd think gold would be trading below 1,031, but we're not. We're at 1,260. And that brings me back to Ron Rosen of the Rosen Report. 321gold.com publishes some of his work there. I have been a subscriber of Ron Rosen. I don't subscribe anymore, but I've taken a photo here of a screenshot of one of the articles in 321, and basically what we've had in gold since 2008 is a running flat correction, according to Mr. Rosen. And I'll read a little bit about what it means. He says the running flat correction is the rarest form and most powerful bullish correction that any item can possibly undergo. Once the correction is complete, the item will perform a rare and intensely powerful bull move. And it goes on to say, he quotes Elliott Wave Principles, EWP, says the forces in the direction of the larger trend are so powerful that the pattern becomes skewed in that direction. And what he means by that is that when gold topped at 1,031, the dollar bottomed at 70.69. In spite of that bottom in 08, gold still went on to make a new all-time high at 1921, which was like a correction, a bearish correction, which is actually higher, which is quite amazing. And then the correction we've had since 2011, of course, has been painful if you'd bought at 1900, but compared to where the dollar bottomed in 2008 at 70.69 and where we're now, with gold at 1260, that has been a very powerful correction for gold. So now with the dollar topping, in my opinion, I mean, it looks very clear, and looking at the cycles, that average cycle from low to high, major low to major highs in the dollar is approximately 7 years and 7 months. So now, with the latest up cycle in the dollar from 08 to 2017 of 8 years and 10 months, that's matched the bull market in the dollar from 1992 to 2001. So I think there's a very good chance that we have seen a top in the dollar. And so I'll bring a shorter term chart in the dollar now to show you how the dollar looks. This latest bull move from 08 to 2017, shorter term chart. You can see it looks like we have made a top completely, and it's taken 8 years and 10 months. So now the next target is around 92, 92.50, but the really important one as well in terms of this bull market we've had in the dollar is 91.16. But I would expect that we will make a new low in the dollar in the next 6 to 8 years. Where it will be, I think it will be lower than that 70 level, because as you saw earlier in the long-term chart in the dollar, which I'll bring back up, we've seen lower highs and lower lows all the way since the early 80s or mid 70s in the dollar index. So now let's go and look at gold and silver, more short-term charts. Longer term, of course, I think we're very, very well set up, especially with the dollar making a long-term top into January this year. So let's look at gold. I've done retracement analysis here from the high in earlier this year at 12.95, almost 12.96. It's like the double top with the earlier high in April. And the latest move down we had to 1205. And as you can see, that 1250 level was the 50% retracement. Yesterday, we dropped below that and we had an outside bullish day. And now we are even testing the 61.8. So I think if we are able to close above 1261, 1265, for example, this week, we could be set to go retest those highs at 1296, or roughly 1295. So now let's have a look at silver. Another short, a bit longer term chart, but still fairly short term. There's like a confluence of trend lines coming here, as you can see. I've taken the support trend line from January 2016, an overhead resistance from July 2016, and an overhead resistance from earlier this year. And they all seem to converge just below 17. So it looks like if we close above 17 or get above that level in the next week or so, that will be very bullish for silver. And yeah, so what do I take from the FOMC yesterday? Not much. I don't think you know, the FOMC, whatever they do now, will change the direction of the dollar. As you can see, the cycle seems to have topped an 8-year bull market, which is just above the average of 7 years and 7 months, and equals, you know, the length of the 1992 to 2001 bull market in the dollar. So we've got years ahead of weak dollar. What it will mean for the stock market, it's difficult to say. The stock market remains very bullish, but you know, we'll have to wait and see what the Fed does in terms of if they come out and reverse their policy completely. That would definitely, you know, keep the dollar going lower. But I don't think they can change that. It's set in stone now, the cycle in the dollar. Will it lead to deflation, debt deflation, or hyperinflation? I don't know, but it's safe to say that you know, the dollar is going lower, and physical real assets are going higher, like gold and silver. So hold on to your physical gold and silver. It has been frustrating the last 6 years, but as you can see, the correction in gold has been very bullish, and it's weird to say that, but that's what's happening. You know, the dollar index bottomed in 2008, and gold is actually higher since the dollar index is bottomed. Now, with the dollar index going down, gold is set to, gold and silver are set to really race ahead, in my opinion. If you enjoyed this video, like, share, and subscribe if you haven't yet. Follow me also on steemit.com, steemit.com, and I'll talk to you later. Bye.